Today, we'll watch a video of Tasha Keeney of ARK Invest being interviewed by CNBC. ARK Invest are long-term investors focused on disruptive technologies, and Tasha speaks to how Tesla impacts the stock market. She suggests that it's short-sighted to be focusing on the recent stock decline. Second, we'll also watch a video of Bill Baruch of Blue Line Capital. He explains why he's buying Tesla as it's falling. So I've got Hans Nelson joining us. He's got an incredible YouTube channel called Hans C. Nelson. Welcome, Hans.
Thanks for having me, Herbert.
So we like ARK Invest. They've been buying hands over fists for the last several months, every single day, and continues to buy as the stock is falling. So this is her interview with Tasha with CNBC, and we'll watch the video. But he says, I wouldn't be surprised about some short-term upsets, but I think the long-term stories, electric vehicles are here to stay. Tesla's prices are so competitive, it's going to be very hard for any other company to catch up to them at this point. That's one of the things she said. And Elon Musk said accurate. So let's go ahead and watch a bit of the video and let's break it down.
Even if you don't own Tesla, you don't drive a Tesla, you don't care about Elon Musk, maybe you should care about Tesla stock. It could be very important for the market. Here's why we say that. Tesla has 3.18 billion shares outstanding. It's in over 350 ETFs. It's got huge options activity. And it's also used in all kinds of derivative trades on Wall Street, things you've probably never heard about, like Delta One strategies, et cetera. The bottom line is Tesla is a very important stock. And let's be fair, because again, that's what we do here on Last Call. Tesla, even with the recent woes, has still made a lot of investors a lot of money. The stock was only $15 a couple of years ago. So if you bought it then, even with the downslide, you've done very well. But let's talk more about Tesla, its importance to the market, and maybe where all the EV makers are going to be headed, because Tesla reports numbers tomorrow. Joining us now with more is Tesla investor and ARK Invest Director of Investment Analysis, Tasha Keeney. Tasha, thanks for coming on again. There's two ways to look at Tesla. A, it's been a massive moneymaker for millions of investors over the last decade. Or two, in the last couple months, it's not been. How do you see it?
Yeah, I think, at ARK Invest, we're long-term investors and we care about disruptive innovation. So, as you said, Tesla is important to the equity market. I'd say it's important to the world at large. I mean, it's single-handedly pushed forward the electric vehicle industry. I think it's going to do the same for autonomous driving. So that's what we're focused on, that long-term story. And I think that given the recent price action, it really suggests that investors are ignoring what I believe will be a massive opportunity in the robo-taxi network. And I think that's pretty short-sighted.
What's wrong with Tesla stock? You guys do great work, great analysis there. You got a $2,000 price target on the stock. It's a lot higher than it is now. What's wrong with the stock, Tasha?
Well, I think investors are concerned about demand for electric vehicles, demand for Tesla specifically. They're looking at this year's numbers versus last year, at the current growth rate of deliveries. Of course, deliveries did disappoint relative to expectations this past quarter. But I think what they should be focused on is let's zoom out and look at electric vehicles as a whole. They are now price competitive with gas-powered cars in many ways, thanks to Tesla. And so Tesla is a leader in that industry, and that story is not going to change. So when I think of the auto industry as a whole, Tesla's not immune to interest rates. I don't expect them to be. We heard that they're in between growth curves on the last earnings call. I wouldn't be surprised about some short-term upsets, but I think the long-term story is electric vehicles are here to stay. Tesla's prices are so competitive, it's going to be very hard for any other company to catch up to them at this point, particularly in the US market. And on software and autonomy, I mean, I think they have a data advantage that is unparalleled.
But yeah.
So Hans, let's pause it there. So she said quite a bit, but the big one is, can Elon change the narrative? This obviously we already you see where electric vehicles going, but it's a tough market. Car business is cyclical. And that's why even though they've changed the business, it's still very much difficult this year. But there's also tremendous progress everywhere else that she listed, and we both have been talking about quite a bit. When are they going to change the narrative?
I think that the ability to change a narrative really is somewhat dependent on the macroeconomy. And I think that with the Fed saying that, hey, we're probably not going to be dropping interest rates anytime soon, I think that really creates an environment in the market as a whole where everyone starts to bring in their time horizons and they start really evaluating their investment decisions on shorter and shorter time frames. And as Tasha pointed out, if you're thinking about the next 12 months, there's a lot
Mhm.
more volatility. It's hard to know. It's very possible that we could see some short term, what she called upsets. And I think that she's probably correct in that assessment. But if you are an investor who is not going with the herd and pulling in your time horizons and getting afraid right now, and you're looking at the core technology of what Tesla's doing and the progress of V12 that has been frankly astonishing in the last several months, then all of a sudden that long-term future of Tesla's ability to generate massive revenues off of software, not just hardware, is getting more and more certain. And the timeline for that is pulling in as well. And so for long-term investors like us, this is actually an exciting time to be putting money into the name instead of going with what everyone else is doing right now, as they're thinking about, oh, there's a possible recession, we don't know what the near term growth story is going to be, maybe this is not the right time to be in the stock. And it just reminds me of the Warren Buffett saying that you
Mhm.
buy when there's blood in the streets. And like there's all kinds of people who have been long-term Tesla fans that I've seen recently who claimed that they were long-term investors who have been selling out of their positions recently, which to me feels like capitulation and makes me really excited that while I think there's some volatility still ahead of us, I think that we are very nearly at the bottom and that the next leg of growth is going to be the one that I've been waiting now for, a number of years as I have tracked the progress of their artificial intelligence research and what they've been doing specifically with full self-driving.
Yeah. The way I've been telling people is I think that no one's wrong. It's not like you're wrong to sell your Tesla stock today if you're planning to buy back. But what I don't like is people who are bullish about Tesla, then they sell and then they become they're like Tesla's terrible company. It's like, whoa, you know, if you have a long-term vision, none of that has changed. If anything, all of that has improved with the bot and energy and robotaxi. But certainly the short term is not good. So if you want to sell now, fine. That's nothing wrong with doing that because you're right. The short term is going to be tough.
Well, when that
So
becomes
let's.
the consensus trade, though, it's just hard to make money on that because you're selling at the same time as everyone else is selling, and it's the maximum
You're the
selling
herd.
pressure.
I see what you're saying.
And
Yeah.
then, yeah, and
Yeah.
then when you do finally come back to try and buy in again, it's already rebounded and it's higher, and you actually
Yeah.
lost shares instead of gained shares. And I've made that mistake before. I've tried to time the market and sell and made those
Yeah.
mistakes and ended up giving up shares. And at this point, I'm not trying to do that nearly as much. There's, I'm looking at some trades that I'm trying to figure out the strategy on to actually get a little bit more exposure to the near term move, maybe through
Hmm.
option leaps. And if I do that, I'd have to do some selling of stock in order to make those trades, and we'll see how that goes.
That's fine. Yeah.
But yeah, that's those are the types of things where I know that I'm exposing myself to extra risk. There's a big possibility that I'm actually going to lose money instead of make money, and so I'm limiting that to a small portion of what I'm
Yeah.
doing overall.
Okay. Let's finish watching what she says because she says something very, that Cybertruck she thinks did not go as well as they were projecting.
I've said people don't want electric cars, they want Teslas. I've driven all of them, it's a totally different thing. Does the Cybertruck matter to Tesla? I mean, it's a niche vehicle, got a lot of hype, right? They had a recall, right? There's some pedal issues and whatever, they'll fix that. Does the Cybertruck matter to Tesla stock at all?
Yeah, I'd agree with you in terms of, sort of the short-term thinking around the Cybertruck. I think we actually thought the Cybertruck would be bigger than it was. It turns out they had some, it was harder to manufacture than Tesla thought. So I think, given the price point, it'll stay at like not necessarily a niche car, but certainly lower volumes than we were expecting. But I think what really matters to Tesla, again, it's robotaxis, it's the long-term picture for autonomy. So I'm really excited to hear about what Elon has to say in the earnings call. He's been teasing us all with his Twitter responses about what he thinks that their full self-driving software might be capable of, in the next months to say year or so, and what markets they might enter. And we also have the robotaxi event Unveil in August this year, of course. So that's, Tesla's dedicating manufacturing resources to this platform. I think that shows their confidence.
Yeah. So Cybertruck, turns out that it's just the pedal issue, and then it's just a 30-second rivet that they just pump in to fix it. But it's an issue, but it's a small one. It's, don't let people come away thinking that the Cybertruck is a failure. Yeah.
Well, and she's saying given the price point, and the price point right now on the Cybertruck is high, but I expect that to be the case this early in the production ramp. So I think the jury is somewhat still out on, what is the COGS going to be once the Cybertruck is ramped up to full manufacturing capacity. If they're able to get anywhere near that $40,000 cost of goods sold price target that they had for the Cybertruck, I think this does end up going on to be a much larger platform, just like ARC was originally projecting. And so I don't know at this point in time that we can say that it's not going to accomplish that. But I would definitely agree with her kind of overall on the fact that even regardless of whether it be is 250,000 units a year, 150,000 units a year, 500,000 units a year, regardless of where it falls in that range, all of that really pales in comparison to the earnings potential that we're looking at with FSD as a platform.
Okay, thank you for that. So let's listen to Bill Baruch of Blue Line Capital. Bill Baruch of Blue Line Capital, and he's actually buying Tesla stock right now. Let's listen to what he says here.
We went shopping for Tesla as well. Now, I want to hear your explanation for this, because you could certainly make a credible argument that, the stock is broken and the story may be too. If you want to focus on repeated price cuts in the face of, the street thinking, well, they're done doing that, and then maybe the shift from the lower cost vehicle to the robo-taxi idea, and just real questions about where the trajectory of this company goes from here.
Yeah, absolutely. The story is in pain right now, but that's something that we all know. I mean, it's been the headlines. It's a very emotional name, whether you love it or you hate it. And, I think right here, we're heading into this earnings report. And for a lot of tech names, it's not about what you did for me. It's about what you're going to do for me. So I think a lot of this bad news has been flushed out here. And yes, it's falling. And I don't like buying falling knives. I don't really, usually step in and make a statement here. So I did increase this a bit. Again, it was the bottom 10 of our holdings, and added about 25% to it. Want to make an impact at this level, dollar cost average in. We hit a trend line. If you go back to that March 2020 low, this is the trend line into that March 2020 low at 140. And now, yes, back about a month and a half ago when I did add in the 190s on the show, I did say 160 was my line in the sand. But we've seen a relative correction in overall tech assets, which allowed me to be patient with this name here coming in a bit. So I do want to add it ahead of earnings. Listen, they may miss, but I think what they talk about in the future is really what's going to be driving this stock. Look at TSM, look at Netflix, look at ASML. Those were all not very bad reports. In fact, they were very solid quarters.
Sure.
But the reason why all of them turned lower was because of how they looked at the guidance and some of the moves they made.
Yeah, but I mean, one of my problems with technical analysis is trend lines don't mean squat if the fundamentals of a story change.
Absolutely. I'm not arguing with that. What I'm doing is taking a calculated position here. We own it. It's in the bottom 10. And if I own this name, I should be adding to it this 140. So I'm not sitting there saying, viewers, hey, load up on this. Well, it's in the bottom 10. I've increased the exposure with some cash we have by about 25%. So it's more of a significant position here. The fundamentals really are not looking good, but I think everything has been flushed out of this name. And if that proves me right, we could turn higher here at that point. And that's what I'm looking at as a trader, as an analyst. And, the rotations we've done, those small things we've done, the names that we wrote up, the names we trimmed, it's given us this opportunity to be patient right here with the outperformance we have so far this year, and say let's lean into a little bit of a stake here into this earnings report.
Now, what'd you think about his comment that initially he was thinking of the bottom line, the line on the sand was $160, and then but then he saw that the tech, just in general, stocks were continued to correct and fall more, so he held a little bit more. Now at 140. What you're thinking on that?
Yeah, I mean, that doesn't surprise me at all given the commentary that we've had from the Fed that we've already mentioned a little bit this show. That now that we're pulling in those investment time horizons, tech is one of the sectors that's really negatively correlated with interest rate expectations. And so I do think that whether you're looking at that from the standpoint of trying to predict where the trend line is going to be and making a correction on that based on what you're seeing. But it doesn't surprise me at all that, especially some of the highest flying tech names are really suffering a little bit from the environment that we're in. And I think it's justified for him to say, okay, hey, since the overall environment seems like tech as a sector is not performing as well right now, or that we're reducing the expectations for that they would carry that over to their decision on timing to go ahead and add to Tesla. I think 140 is, it's a very interesting level for us to be back to about what, a year and 4 or 5 months from the last time we were down around 100. And this is, that cycle that we go through. If you go back and think about the period from 2013 all the way to 2019 with Tesla kind of bouncing around sideways, 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 and it would go, up and down by one or two times. But then finally, once you see the execution of the company really flow through, and it had to be execution on new levels of business. And so, we went from just having the S and the X to then suddenly having the 3 succeed, the rapid follow on of the Model Y with the Model 3, and the expansion into China with the production facility there in Shanghai. All of those things kind of stacked up on each other and really led to the outperformance and execution by Tesla over that period of time. And then that kind of gets gasoline thrown on it by the fact that we were in that zero interest rate environment. And that really made things crazy. So I think that, we're going to need to see several new areas of execution again in order to see a significant move like that again. And, I think that this is one of those points where it seems like a good place to be loading the bag and, looking at the way that the spring is coiling moving forward. If we do see massive revenues coming in from FSD at the same time that we're starting to get increased revenues from the energy segment of the business and potentially launching the next generation platform manufacturing and moving to new levels of scale in the hardware manufacturing side of things. And then potentially, looking at things that they're doing right now with producing data centers that they want to do copy and paste, that we know that that's got to be part of build out for some sort of software infrastructure that they would not build unless there's, expectation of return on investment for those things as well. And all of those are really areas of execution for the business that go far beyond what Tesla has proven today. And as those things start to flow through to the income statement, then I think we get a complete re-rating.
Yeah. Yep. Okay, you did a fantastic summary. I was going to say a lot of things you were about to say, right? So it's a car business, and the car business is struggling. It's going to be a tough year, especially going through two growth waves. But all the other things are looking really, really good. Energy's growing well. FSD is now looking like it's an actual product, and progress is being made all over the place there. And then you've got bots going to be launched next year, and then you have the next gen platform, which is multiple vehicles. Is the way that's the platform is designed for. And so, yeah, just hang in there another year, 2 years, and then we'll see how this moves. So thank you so much, Hans. Appreciate your commentary on all this. Follow him on his YouTube channel at Hans C. Nelson. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.